So a lot to cover off in this video. We got Bitcoin up 2.3%. Some altcoins trying to follow it, but they're not in the green, apart from Fantom, which is up 0.5% at the time of recording this video. We've got a lot to cover off. We need to cover off Luna. Is Luna completely done, and what happened? How did the attackers manage to smartly, from their perspective, take away over $800 million in profit? And should you still be entering Luna? We're going to answer that question. I can't believe we still need to answer that question, but we do need to cover that off nonetheless. We need to look at the Bitcoin charts to see the key levels, because are we heading lower? I'm going to share with you the case to the downside, but I've also seen one case which could give us a bit of hopium that we can avoid a multi-year prolonged bear market to the downside. We're also going to mention Fantom, because if you're holding Fantom, there's a critical piece of information I have to share with you, and it actually carries over to other protocols as well. So make sure you hit up the like button. Don't forget to subscribe. A lot to cover off in this video. As always, if you like this video and you want to make sure you stay safe in crypto, then check out the links in the description to get yourself set up on NordVPN, ijaz.uk/NordVPN. Yes, apart from coins like Luna and Ponzi schemes and many other things, you need to stay safe using a VPN. So get yourself set up on a VPN. At least at the very least, make sure you're securing your IP address when browsing and messing around with crypto. Now, I want to start off with this first chart, really, and coming on to my 5-minute chart, because today's been a bit of a topsy-turvy day for Bitcoin. You can see we opened up at midnight my time, and we kind of moved up towards 30k, and then we ran all the way to our day low today, which came in at about, let's take the exact number here, the day low we faced today was 25,300. We then managed to rally up to where we're at now, which is just shy of the $30,000 mark. And the question we now have is this a proper bounce we're seeing? Or are we simply creating a bear flag whilst the bears get ready for the next big move to the downside? You can see we've had a nice, well, not nice, but a big move to the downside. Is this just a bearish continuation pattern? Is it just an impulse wave before the move to our next line of support, which comes at 24,000? Remember, this 24,000 level comes from a level dating back all the way to when Bitcoin, if I show you, let's see if we can show you here, all the way back to here in December of 2020, okay? That was before Bitcoin then ran up and posted its 41,000 point there, okay? So that's an important level of support at 24, and thereafter, the next level of support is 20,000. Now, the concern here is as follows, and I want to come back over to this chart, which is a little bit tidy, and come on to the weekly pattern. Now, remember we were monitoring this pattern, and the powerful thing with this pattern was whatever happened, we were technically in an upward trend, as characterized by the white lines, which you can see. Now, as I mentioned very clearly, everything is fine if and until we cross this trend line. And even then, you can argue it's okay as long as we don't create the lower low. And the lower low exactly has now been beaten, right? We wicked below the low from June of 2021. Okay, that low was at that 28,600 level. We've fallen quite substantially below that. But what we can see is the yellow line is the key line. But you can also see that the weekly candle, if it was to close now, we still got 3 days left, but if it was to close, it would just be a wick below. We'd still be holding that support line on a weekly perspective at 29,000. Now, I know I'm holding on to some hopium, but that's our job here. We have to look at, okay, is this definitely going to fall? Because remember, when everybody's saying something, we have to be a little bit cautious. And at the moment, everybody's giving up, right? There's complete capitulation. Everybody's giving up. They're falling out of love with crypto, and they're turning off their exchanges. They're deleting their apps, and they're going to go and do something else for a couple of years until Bitcoin's back at all-time highs, and then they're going to wish they were in crypto. So what we need to do is say, okay, we'll prepare for ourselves for 24,000. We'll prepare ourselves for 20. We're not going to create crazy price targets just yet, like 15,000, 16,000, until there's evidence for that. There is evidence for 24, so let's work with 24. If we lose 24, we can then claim 20,000 as the next support. But on the weekly candle for the next 3 days, if this is a real bounce, which we've not confirmed yet, remember when I'm showing you that 5-minute chart, if it is a real bounce and we can stay above this line at 29,000, then the weekly candle has still closed above it, and we can make a case for this to start bouncing back up here. Now, I'm not saying this is super likely. I'm not saying this is super good. This is what's going to happen. But you can make a case from it from a technical perspective. So it's not the complete end just yet. Now, a weekly close below would be the end of that level, and then we trigger ourselves into potentially a long bear market, which can take many months, maybe years to recover from. And that comes with its own opportunity. And that's what we need to talk about today, because many of you guys have been messaging me, asking me about Fantom, asking me about various different coins, understandably. And the reality is, I can show you a technical pattern on Fantom. That's not a problem. I can show you the support level, and we will do that for completeness. But the reality is, what really matters is the wider market. What matters is the wider market plus conviction. And this sounds really simplistic, but the reality is, if you cared about price action that much, you would have panic sold already. There's no point panic selling now. Your coins are at a percentage of what they were just weeks ago when I was telling you, for Fantom as a clear example, we can pull up the videos. I was telling people at 125, 130 to sell. Those of you who watched that video, comment that below just to confirm that I'm not making this up. I said sell. If you're going to panic sell at 60 cents, if you're going to panic sell 50 cents, sell now. There's no point selling. If you're still holding, you didn't sell. So clearly there's something there. Whether that's hopium or conviction, we're going to find out now. Because the plays you should be holding right now are only pure conviction plays. Plays which you generally think that if we're in a potentially a multi-year bear market, hopefully it's not, but we have to prepare ourselves for that. If it's a multi-year bear market, are they coins I want to hold and accumulate through that period so I have a big bag of it ready for the next bull run? That's the decision you need to make now. And we just came off a course member live stream where we were doing a critique of one of the members' portfolios. And I noticed a theme, and I wanted to share that theme with everybody. And that is, if you are holding Fantom right now and you have a whole bunch of ecosystem plays, I call these second derivative plays. If you're holding, the DEXs, the tokens for the DEXs on Fantom, or you're holding something like Beethoven or Liquid Driver, all these kind of smaller cap projects, you really are playing a risky game. And I think you need to understand how risky a game that is. Right, to put this into perspective right now, in fact, let's do this. Let me head on over to here and let's head on to CoinMarketCap and type in Fantom. Okay, I want to remind you that Fantom is sitting at a market cap of $750 million, 760 million in market cap. This is a small project relatively, and it should have that part of your portfolio based on the market cap, right? It shouldn't be a crazy part of your portfolio. It's a risk. Therefore, we have people who are holding the derivatives of Fantom, Liquid Driver, Beethoven, various other projects, expecting crazy returns. In this market, it's even, quite risky enough to hold projects like this. You need to revert back to important plays and high conviction plays ready for the next run up. So for me, as a kind of rule, I'm not focused on second derivatives. So if people, for many crypto influencers were talking about, let's say, Luna, and they were talking about holding the DEX on Luna, then they were talking about all the other ecosystem plays. In a bull market, that works great because everything is going up. Right now, you cannot afford to hold all these 10 million, 50 million, 100 million, 150 million market cap projects in your portfolio. They're going to get decimated, right? In a bull market, feel free to add those. Or if you're adding them now, make sure you're adding them in a part of your portfolio which literally you don't care if it goes to zero. It's got to be that extreme with that because they are really low market cap plays. And in this type of market, when even Bitcoin is struggling, who are we to expect? And even, the larger cap projects like Ethereum, Solana, ADA are struggling, and we just had Terra Luna, top 10 project, get decimated, wiped out. What do we expect from other projects, right? Smaller cap projects like Fantom, let alone go into their derivatives and their ecosystem plays. So be very, very careful with that. We're just wanting to stress that message a little bit more. Now what I want to do is move on to what happened. This was a really interesting thread covered off on what happened with the Luna. And this time it's coming from the perspective of the person doing the attack. Because the reality is we can spend time talking about the flaws in the Luna ecosystem, and rightly so, but we also have to study what was done by the attacker, because people will be studying this and it will be replicated. And that's my biggest fear right now is for those who are in Luna huge, like we have massive sympathy for them. Hopefully they learn their lesson not to be so over allocated to any given portfolio. But my wider worry is the contagion affecting the industry. Certain projects can find that you can find a loophole in a project and attack it. That's one thing. But if somebody can systematically find many issues and cause contagion across the whole markets, which is what we're seeing fear across the market. Tether had a bit of a deep egg, causing fear across the market. Because again, if Tether was to get wiped out, there'll be huge implications. We're seeing all other coins which have a stable coin getting hit because of this contagion effect. So let's take a look at this and understand what exactly went on. So let's scroll down. This is a really good tweet, Fred. Shout out to On-Chain Wizard. Our story starts in late March when the Luna Foundation Guard starts buying BTC to help back USDT. So we remember this. Do Kwon got a lot of praise for this, but this was initially the downfall. he started to back the reserves with BTC. Now, initially, we all thought this was quite a smart thing to do. But the problem was with how he was doing this so publicly, okay? So we'll keep going with the story and we'll come back to that in a sec. The second leg comes in the form of the 4-pool frax announcement for USDT on April the 1st. So for those who don't know, there was the 3-pool, and then Do Kwon announced, you can see the tweet kind of embedded here, that they're going to launch the 4-pool. And you don't need to worry about the details. I'm going to explain why it's important in a minute that this 4-pool was launched specifically. We don't know when the attacker borrowed 100k BTC to start the position, other than it was sold into Kwon's buying, still speculation. LFG bought 15k BTC between March 27th and April 11th. So let's just take the average price of, say, 42k. And the reason this guy's doing that is to calculate how much money the attacker could have made. So you have approximately a 4.2 billion short position built. Okay. Over the same time, the attacker goes and builds 1 billion OTC position in USDT. The stage is now set to create a run on the bank and get paid on your BTC short. Remember, you got a short on BTC. You're expecting it to go down. In anticipation of the 4-pool, so because they were creating the 4-pool, LFG, which is Lunar Foundation Guard, they remove 150 million from the 3-pool liquidity, okay, to get ready for the 4-pool. Now, the liquidity was pulled here. You can see that on the 8th of March. And then the attacker, the same time, the timing is critical with any of these coordinated attacks, uses 350 million from the billion they've got of UST. They use the 350 to drain the liquidity on Curve. Don't forget, LFG pulled out 150. Okay, so LFG pulled out 150. Then LFG pulled out another 100. So they've pulled out 250. The attackers pulled out 350, uses 350, and they drained the liquidity. It was perfect timing because they knew and they could see that Luna themselves were moving around liquidity from the 3-pool to the new 4-pool. Therefore, they knew they needed less UST to drain that pool. Really, really important. These are the nuances that make a coordinated attack. If any of you have watched like Ocean 12 and Ocean 13 type movies, it is that kind of stuff. These frauds are really, clever, and they follow every little detail. So anything you're making public in crypto is really important. But this only starts the depegging, right? So it started the depegging, and when that happened, you saw the curve become drained. We saw it drop down to 0.972 on the peg, which is not great, but it's just the start. LFG begins selling BTC to defend the peg. Remember, this was another criticism of Do. He came out strongly and said he's going to defend the peg, and he started defending the peg. He was selling BTC to defend the peg, okay, to go buy UST to defend the peg. Okay, and this put downward pressure on BTC. And we're just getting started. So with the curve liquidity drained, the attacker used the remainder of their billion. They've got 650 left, remember? They used 350 to drain curve. They've got 650 UST left, and they start offloading it on Binance. They start selling. Remember, if you're selling, you're increasing the supply, which is pushing the price down even more. It's worsening that depeg. Then, when all this news is going around on social media and the fear is going around, withdrawals from Anchor turned from concern into panic. This caused a real depeg as people fled for the exits. Guys, this is no different to the whole how liquidations happen. Remember whenever I look at TA, I share with you all that market movers, market makers only need to move the market by a few percent. They just need to trigger the stop losses from the highly leveraged position slightly under them, and then you get this cascading domino effect. It was the same thing here. The attacker just needed to drain the liquidity, move the peg enough that everybody on Anchor started getting fearful, started removing their Anchor, thus creating a self-fulfilling prophecy, which does depeg continually. So LFG is selling BTC to restore the peg while the attacker is selling UST on Binance. Okay, so on the one hand, you've got LFG going and selling BTC in the market. Remember, Bitcoin fell 25% in just that day. Okay, they fell down 25% in just that day. Eventually, the chain gets congested and the centralized exchanges suspend withdrawals of UST, which again fuels the panic, right? If you've got centralized exchanges like Binance coming out saying we're suspending the withdrawal of UST, that creates a real panic. USD pegs to 60 cents at the bottom while BTC continues to bleed out. As BTC is bleeding out, it's like running up a hill, right? So it's like pushing water up a hill almost, because you got Do Kwon selling BTC to try protect USDC, but every time he goes to sell his Bitcoin reserves, it's having less and less an effect, okay? Because he's selling the BTC, but he's getting less and less UST for the same amount of Bitcoin. So his reserves were getting weaker and weaker the more he was doing it. It's almost like if you're imagining like a, I don't know, like a Street Fighter game or Tekken or whatever you guys play nowadays. And every time you're hitting your opponent, you're kind of hitting yourself and losing your own health too. That is what was happening to him. Every time he would sell the BTC, he was hurting himself because BTC prices were falling. The crypto community panics as they wonder how much BTC will be sold to keep the peg. There are liquidations across the board, and Luna pukes because of its redemption mechanism. The attacker very well could have shorted Luna as well. Yeah, that's another interesting point. If you're the attacker and you know what the plan is, you could have placed a heavy short on Luna as well, so you're profiting from that side as well. Bitcoin fell, yep, 25% from 42K to 31.3K. Crazy. So how much did the attacker make? When he works it out, you made 952 million on the short. You would have had to pay some cost of doing business, which is 125 in terms of how you were draining on USDT and the Binance dumps. So probably profited about $815 million. Now, why do we care about this? Well, the reason we care about this is anytime things like this happen, and you can look into history, and I was screaming this as well, is it's not just one attack we see, right? George Soros, who made loads of money, probably $1 billion in a day, okay, shorting the British pound. He didn't stop there. He then went and attacked the Thai baht. He tried to attack the yen, the Hong Kong dollar. Once you find these weaknesses, they continue to exploit them. So we have to be very, very vigilant. We need to make sure we're being smart in the market. We look at our portfolio. We're not over-indexed on any given project. Even the highest conviction project you have, you should not be too highly leveraged on that. You should not be in any specific stablecoin. You shouldn't be chasing 20, 25% APYs. You should not be in any risky plays, right? You shouldn't be chasing Luna right now. That's another point. People are still buying Luna. People are still buying Luna. Look at this, guys. Just for those who are still buying Luna, I just want to mention this. Because you may think you're smart in terms of, oh, this may be the buy of the century. I've seen some crazy, like, top influencers tweeting this, posting this, talking about this could be the buy of the century. If you've got a bag of Luna, it's one thing to hold it. But to actively deploy new capital into Luna, like, you must be a special kind of, like, degen. Like, we need a special category for you guys. Like, and it's crazy because the Luna you're buying now, just let me put this into perspective. Luna was sat with a supply of 700 million roughly. Just use rough numbers. It's now 27 billion at the last time of checking. It's probably more now. They are printing Luna into supply at any cost. They are not trying to protect the Luna price. It's all about the peg. They're trying to fix the peg, and they'll probably come up with a new token later on, not Luna. It's the peg that they're worried about, okay? So this thing that you're buying into with Luna, like there was a YouTube influencer who's literally just posted saying, you know, if Luna ever recovers, I'm going to be a Luna whale because I've got millions of Luna coin. Your millions of Luna coin doesn't get you anywhere. There's 27 billion Luna in circulation right now. So, you know, it's going to be, you know, I don't know what you're betting for on the upside, even if the peg fixed itself. Which, by the way, the strategy, which I don't think is much of a strategy, is to let all the bad debt go out, drain everything, let the peg go as low as it wants, let it all get out, and then work on restoring the peg, okay? And if the peg can slowly start to restore, yes, Luna can go up, but what's going to happen with Luna? Luna now, with its huge supply, is fully diluted. And then if and when it does start to climb, guess what? You've got a bunch of bag holders, a bunch of them, because rightly so, there's no point selling at this point. If you've got a bunch of Luna, just leave it there, put it in a safe, and maybe one day, maybe by some miracle, you know, so everybody's going to be holding onto those bags. And so anytime you get any little bit of movement to any sensible price, people are going to keep offloading, it'll fall back down again. They're going to keep offloading, it'll fall back down again. What a mess. Luna is not the same Luna as it was 4 or 5 days ago, so just be very careful for those who are still investing. So coming back to the markets, let's keep an eye on these key levels. We got Bitcoin trying to get to 30. I wouldn't get caught up trying to time the bottom. I'm still awaiting more downside risk. The exciting news is looking at that weekly chart, which I shared with you, to see if we can close the weekly candle above the 29 horizontal level, which gives us a little bit of glimmer for hope. But right now, I'm maintaining my price target at 24. And if we head towards there at 24, I will be nibbling some more. I'm not nibbling on these green candles here. I did do a little bit here, but definitely not here. Similarly for altcoins, if I'm buying altcoins, my rule right now is my altcoins are the ones I'm holding for a long time. It's always been like that, high conviction plays. But now if I'm buying any, like if I want to buy some more Fantom, if I want to buy some more Cardano, if I want to buy some more Solana or Algorand or any other coin, my rule is to make sure I'm doing that in the specifications of my portfolio. So that means I will have to buy a little bit more Bitcoin as well. Maybe I need to top up my Ethereum. Maybe I have to top up my ADA religiously. I can't just go, oh, look, Fantom's so cheap, I'm going to throw a bucket onto Fantom. That's not how it works. I'm doing it based on the portfolio allocations. So there you have it, guys. Crazy market, but a really important market and really important couple of weeks coming up now for us to really get to our portfolios into shape. You've got some unprecedented pricing with unprecedented fear right now, but now is the time for the people who are serious about crypto, the ones with the level head, not the FOMO, not the tourists, not the people chasing 1,000, 2,000 X's, but the people looking to build sustainable wealth in crypto, get their heads down to allocate their portfolio, to build the positions you're looking to build, research deeply a few good coins that you believe in, that you want to hold through potentially a bear market and accumulate more during a bear market. And then you feel in a couple of years, those are the ones which are going to be shining at the top. Hope you guys enjoyed this video. As always, smash up the like and subscribe. If you like my perspective, consider checking out the course member live streams, ijaz.uk/member, where we have 3 times weekly live streams where you guys can get involved, ask me questions, we can critique your portfolio, we can do tokenomics together, we can do in-depth research and fundamental analysis together, and a whole lot more, right? Trading crypto, investing in crypto can be a really lonely place, so consider checking out those live streams because you'll be part of a community of people going through the exact same thing that you are, that can help you in real time. As always, guys, what I'm going to do at the end of this video is I'm going to link up the video to the Michael Kong interview. Go and watch that. And if you invest in any of the other coins, these are the types of videos that you want to watch. Listen to the founding team. Learn about the fundamentals. Learn about the technology that you're investing in. So many people, this puts into perspective, so many people who were invested heavily in Luna never understood the whole pegging situation. They didn't understand the dynamics, the tokenomics, or how it worked. Don't be that person. Hope you guys enjoyed this video. Smash the likes and subscribe, and I'll see you in the next one.